So if you take a look at the way that it stacks up to those guys, what exactly then does that say about the future for Tesla versus a GM or a Ford or a Volkswagen who have grand EV ambitions of their own?
I think all of the OEMs, the major manufacturers, are actually doing pretty well. And we can talk about a 62, we can talk about 69, 65, where a lot of the major manufacturers are congregating ratings-wise. And those are low-risk ratings. Over 90% of companies that have failed in the last 20 years have been rated 40 and below. So the companies that are rated 60 are actually really quite strong. What Tesla has that others don't is the ability to experiment with things like pricing, and you're seeing that now. And that's a way to capture market share at a time when many people are afraid to buy new cars because they've become so expensive. So you've got a perfect storm in autos, like a lot of other industries, where you've got high inflation, you've got recessionary concerns, you've got the move to EV, which can provide even more costs and embed more costs, and you've got supply chain challenges. So all of those kind of wrapped together, and Tesla's in good shape.
It's fascinating that basically your analysis suggests Tesla's price cuts come from a position of strength and not desperation, and that's obviously been, an argument point in the market. It's also, we watch the shares, for instance, AutoZone, and AutoZone, has bought back like 85% of the float. It's crazy. But are those auto parts retailers, you think, in fundamentally good health? Are they continuing to benefit from some of the pandemic tailwinds or not? Are they more of a financial engineering play?
Well, no, I think they're fundamentally reasonably strong. AutoZone's rated a 64. O'Reilly's is rated a 68. These are good ratings. And a lot of that comes from, again, the consumer factors. People are trying to buy fewer new cars, perhaps, holding on to cars a little bit longer, and in doing so, they're buying more parts. So those are fundamentally reasonably strong companies because of that factor.
Is that a longer-term trend, people taking care of their cars longer? And if so, does the EV aspect... I asked this out of a position of experience. Car. I literally have an 05 Infiniti with a 218,000 miles on it. I've been paying for the upkeep. It's costing me more now. But can you do the same with EVs that you can with my internal combustion engine vehicle?
I'm worried you're not driving your car hard enough, but definitely. We don't know yet what the lifespan is on parts for EVs. We just haven't gone through enough cycles. But without question, there's a big push, and every manufacturer is pushing more for EVs, which is creating more supply chain issues, but it's also creating more demand and education of the consumer base. Not everyone's prepared to go there yet, and I think that's one of the reasons. They don't know how much flexibility they're going to have with their vehicle.